We're starting off with a big story in the tech sector, as Chinese e-commerce giant Alibaba has announced a massive $10.2 billion share placement to fund its push into artificial intelligence. The company will issue 710 million new shares at a price of HK $112.70 apiece, which is below the stock's Friday closing price. This move has sent Alibaba's shares plummeting, with a drop of as much as 10% in Hong Kong trading. Now, let's take a step back and understand what's driving this move. Alibaba has been investing heavily in AI, with plans to spend at least 380 billion yuan over the next 3 years on cloud computing and AI infrastructure. This is a key area of growth for the company as it seeks to make AI a major driver of its future success. But the question on everyone's mind is, will this investment pay off? Alibaba's profits have already taken a hit, with a 75% drop in the latest quarter due to heavy spending on AI. And with other Chinese tech giants like Tencent also ramping up their AI investments, the competition is fierce. We'll be keeping a close eye on how this plays out and exploring the implications for investors. Is Alibaba's bet on AI a savvy move or a risky gamble? We'll be discussing this and more in the coming segments. For now, it's clear that the world of tech is undergoing a major transformation, driven by the rapid advancement of artificial intelligence. As investors, it's essential to stay informed and adapt to these changes. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of tech and finance, where the big players are making waves. Let's start with PayPal's performance, which has seen a 2% dip in its stock price due to a 2% decline in payment volume. This is largely attributed to the economic downturn, which has affected consumer spending habits. On the other hand, Jim Cramer has been sharing his insights on Space Exploration Technologies Corp., which has seen its stock price dip by 14.9% since its IPO. Cramer believes in the company's long-term potential and has advised investors to buy the stock for their children. Cramer also discussed the importance of lockup expirations, which can impact stock prices. In the case of Space Exploration Technologies Corp., the first lockup expiration led to a 15.8% increase in stock price. The company's shift towards becoming an AI company, with its $1.9 trillion valuation, has raised questions about whether this valuation is justified. While the company's revenue growth is impressive, with a 92% annual growth in the second quarter, its capital expenditure has overshot analyst estimates, raising concerns about AI profitability. We're also looking at Jim Cramer's thoughts on other companies, including Space Exploration Technologies Corp., which owns Elon Musk's Grok AI platform and the Colossus data center. The company's revenue growth is substantial, but its price-to-sales ratio of 66 commands a significant premium. As we navigate these complex financial stories, it's essential to consider multiple perspectives and evaluate the risks and potential returns on investment. While some investors are bullish about these companies' prospects, others are more cautious. Hedge fund data shows that several notable investors have stakes in these companies, including VY Capital and Ron Barron's BAMCO Inc. Ultimately, as investors, it's crucial to do our own research, consider diverse viewpoints, and make informed decisions based on our individual risk tolerance and financial goals. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at some exciting news from the world of finance. Forex.com, an online trading brand of StoneX Group, has just launched an overnight trading service for selected Japanese equities. This new offering allows clients to trade CFDs and stock knockout options on certain Japanese stocks from 5:25 p.m. to 5:00 a.m., providing greater flexibility and optionality for investors. The launch includes a range of prominent Japanese companies, such as Toyota, Honda, and Sony, among others. This move is expected to appeal to traders who want to take positions on price movements in these equities without owning the underlying shares. The Japan Stock CFD knockout options also provide an additional way for clients to manage their exposure by incorporating a preset knockout level. It's worth noting that while this new service offers greater flexibility, it's essential for investors to understand the associated risks and costs. Spreads, financing costs, dividend adjustments, and other costs or adjustments may apply to these trades. Additionally, the maximum loss for Japan Stock CFD knockout options is limited to the option premium paid at the outset of the transaction, but actual execution may differ from expectations during periods of sudden market movement. As with any investment, it's crucial to do your research, set clear goals, and manage your risk tolerance before diving into these new offerings. StoneX Group's global trading infrastructure and technology are expected to support this new service, providing a robust platform for traders. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.